Hey guys, Rodney Miller, hard money partner here. I loan money for real estate deals. I'm a hard money lender in Oklahoma City, Tulsa, and most of Oklahoma, the state of Oklahoma. We just did a loan actually in Lawton, and we did one not too long before that, I believe in Okemah. So we'll go all of most parts of the state. We don't go everywhere, but we'll look at it just about anything in the state of Oklahoma. I get asked all the time how I underwrite deals, and so I'm going to take you through my underwriting process real quick, just kind of so you can see when you call me what's going on the other side. So usually when somebody wants to borrow from me, I just tell them to call me. I don't have a loan application. It's a very simple process. You get the deal, or you have a deal you're looking at, you want to make an offer on, you call me up and we discuss it. So basically what I'll do is I'll just ask you for well, for number one, for the address. I want to know what the address is. And I'll start looking on Zillow, and I'll ask you three numbers. Well, what's the purchase price, or what are you going to offer for it? How much money are you going to put into it in the rehab? And then what is the ARV, the after repaired value? And those three numbers, I can look at it and kind of give you an idea of what I can loan you on the deal. Now, I try to be at about 65% all in. So the better you buy the deal, the less money you got to bring to the table. So basically the way it works is, I'll give you some terms here. Basically, my terms are this. I will loan 13% in 3 points. Let's get that out of the way. And people ask me all the time, well, if I do a bunch of deals, just go down, everybody gets the same deal. I don't really change my terms, and that's going to get more attractive as other lenders, the banks and stuff, start going up and tightening up on their money. So the time to reach out to hard money lenders and develop relationships is now, because when the shit hit the fan, and I saw it in 2008, and things slow down and stop, and the banks just decide overnight they're going to stop lending to you, or they're going to make it a lot tougher for you to borrow. Well, you're going to be calling guys like me, and there's Russell and some other guys here in town that do the same thing. But if you're doing a lot of deals now and you're just relying on banks, I highly suggest, based on my experience, that you start building some relationships. You might not want the money now because you're getting the cheap bank debt. You might want to start building relationships. All right, back to how I look at loans. So my terms are basically this: 13 and 3. I will bring 75% of the money to the closing table on a purchase. I will bring 100% of the repair money, as long as those don't exceed 65% of the ARV, the after repaired value. Okay, so you're always going to have skin in the game, because you're always going to be bringing 25% of the purchase price to the table. So I do the purchase and repairs. I have a 3-month minimum of interest, so I need to get at least 3 months interest. But I've never seen anybody do a flip or a rehab or anything to where they need the money less than 3 months. Very rarely does that happen. Very rarely does that happen. So those are basically the terms. I don't need your financials. I don't need income statements. I don't need any tax returns, anything like that. I'm going strictly off the deal, off the real estate. Now, I said earlier that you have to have skin in the game. That's not really exactly true all the time. If you're buying a deal, or you're getting a smoking hot deal and you're under 50% ARV, I'll loan I'll bring all the money to the table. If you already bought a house and you just want to borrow the rehab money, and I'm into it for 50% or less of the ARV, with just the money I'm bringing to the table, I'll bring all the money to the table. But rarely, that happens quite a bit actually. But a lot of people bring me deals to where, they're paying 70, 80 cents on the dollar. Those deals, you will have to bring your own money to the table if you want me to bring the purchase and the rehab money. All right, so basically I'm going to share my screen here and show you how I underwrite these deals. Okay, so this is my spreadsheet. So when you call me up, basically I get most of your borrower data here. I'll get your name, information, all that stuff, just basic information. This is where the magic happens. So let's just say that you are borrowing, let's say you're buying a house for $100,000. That's what you're purchasing for, $100,000. Okay. And then let's say that your rehab amount is $40,000. Put that in there. And let's say that you want to borrow as much as you can on this deal. Well, we're going to bring 75% here. We're going to bring $75,000 to the closing table. Remember, 100,000 purchase. You're bringing 25%. You're bringing 75,000, right? Okay, gotcha. So then you want us to bring the additional 40,000 to the closing table for rehab and repairs, right? So you're looking to borrow 140,000. Now let's say the ARV is $300,000. 300. Okay, $300,000. 65% of everybody is 195. You're only asking for 140 or 75 plus 8. So you're good. No problem. You can get all the money here. Let's say the ARV is only $250,000. $250,000. We could bring, of course, the 75,000 and the whole 40,000 because that's going to fall under 65% of the ARV on this one's 162. Correct? Where it gets kind of tricky is when you start getting like 180. Let's say it's worth 180. $180,000. We can only bring $117,000 a table. So we bring the 75,000 to the closing table. And then you get the 40,000. That's still, you're still good there. So what else we do is when we send you over a loan quote, if you look here on the left-hand side, we try to take into consideration, and you should be doing this yourself with some kind of an app or something. We look at your holding costs, your closing costs, your fees, your points you're going to pay to us, your builder's risk policy, all that. We try to figure out how much you're going to bring to the table, and then we figure out what your profit margin is. So we look here at a holding cost. We just put a 5-month holding cost in here. So you can kind of get an idea of if you hold it for 5 months, what are your costs going to be? We got holding costs, utilities, et cetera, rehab overages. So if you go over on your rehab, which most people do, realtor commissions to sell it 6%, you got more title company fees to sell it, all that. And so people are shocked when they see this, because a lot of times I'll say, look, you're only making 5,000 on this deal and I'm gonna make more than you are. You still want to do it. And most people decide they do not want to do it at that point. So, let's say here the ARV was 225,000. 225,000. We could bring 146 to the table between the purchase and the rehab. Look here, this shows you your net profit based on our numbers is $45,000. You'll get this when we send over the loan quote to you. You'll get our loan quote with your estimated profit. We can also send you a proof of funds letter if you need that. So if you're in a hurry and you want to try to get a deal, call us quick and we'll get you a proof of funds letter out. So when you get this loan quote, we can get it out to you usually within 20 minutes of you talking to me. I send it over to Patty. She kind of tweaks a few things and emails it to you. But this will give you all your numbers, your cost to borrow, your gross profit, and then after you take your utilities and your holding cost out, kind of what you're looking at, your net profit here. And sometimes that's negative and you might not want to do the deal, but that's kind of how we underwrite a deal. That's how we look at it. And I hope this makes sense to you, because we're trying to make deals go through and we're trying to give you information that you can use to make informed, smart decisions. Like I said before, you need to start developing relationships with your hard money lenders and your alternative sources of financing. If you have private lenders, you really need to ramp up your efforts on that, because I've been through this before. 2008, I had, 50, 60 rental properties and I was blowing and going, and I had 2 or 3 banks I was working with. And almost overnight, they all just stopped loaning. And then they started hiring these appraisers that were, appraising the properties way down. I mean, we're literally comparing them. We would get the appraisal report and it would be showing boarded up properties. And our property was, sitting there with tenants in it and it was livable. And they were just doing anything they could because they were scared. Bankers get scared and they loan like crazy like they are now. And then overnight they will flip and they will really clamp down on their lending. And so don't let the faucets off for you. It happens. It's real. And we've been on a huge bull market run and it might not last forever. I'm not trying to scare you. I'm just telling you that happens. So hope that helps you out. Rodney Miller, Hard Money Partner. If you have any comments, we'd love to get some comments from you, or I would love to get comments from you, below about if you lived through 2008, what you experienced, what you think is going to happen. And, nobody has a crystal ball, but what you think is going to happen in the near future? Do you think we're going to keep going for another few years? Or do you think we're coming up on a big reset? Who knows, man? Who knows what's going to happen? But these are crazy times. Hit me up if you need a loan, hardmoneypartner.com. Check us out. Sign up for the YouTube channel, subscribe, hit the button so you can be notified when these videos come out. And hit me up for a cup of coffee, man. I love meeting all you guys. If you're in town, Oklahoma City, you're from Tulsa, when you're in town, hit me up. If you're local, let's go get a cup of coffee. Rodney Miller, Hard Money Partner. Thanks.